Okay, we're going to go ahead and get started. Thanks everybody for coming today. So I'm Jeff Tompkins. I've got my partner Richard in the back. He's eventually going to be coming up here to kind of field questions. I don't mind being interrupted, so if you have any questions, just raise your hand as we're going through this, and feel free to ask your question, and we'll address it as those come through. We will do a Q&A at the end as well, so if you need to ask anything after the presentation's over, feel free to come up and talk to us. All right, so let's get into it. So what I'm going to show you guys today is how you could have used one indicator to predict the markets. And in particular, we're going to be looking at 2018. It was a wild ride for a lot of us. Saw a couple of major market corrections and sell-offs. So I want to show you guys how you could have predicted those using a simple indicator that's available on virtually any trading platform. And then I'm going to show you how you can actually implement that in your own trading to either get out of the market, go flat if that's something that you want to do if you're long equities, for instance, or take advantage of the moves using strategies like options or futures. Okay, so again, we're going to look specifically at the major sell-offs that took place in 2018 to start out. And like I said, this one particular indicator that I'm going to show you guys, and a lot of you have probably heard of it, you just may not know how to interpret it or use it to predict market movements. But it actually predicted the flash crash of 2015 an entire day before it happened. So it does give you good warning. It predicted the 10% correction we saw in October of 2014, and it actually gave us a 2-week warning in that case. It predicted the crash in July of 2011, several days before the bears began driving prices way down. And it predicted the major sell-off in 2008 when the market lost more than half its value. So those are more examples. I could probably go on and on with examples, but I just want to give you kind of a spectrum there of what this particular indicator can do. So we'll look more specifically at recent sell-offs like those that occurred in 2018. So what I've got here is a chart of the SPX, the S&P 500, and this is a daily chart. And how many people were trading last year at any point in time? Probably almost everybody, right? So the first major correction we saw was in January, and this particular indicator that we're going to be looking at actually predicted this sell-off. This was a really strong mean reversion of the 200-day moving average, which I have plotted in red. And it predicted that. I'm going to show you how that happened in a minute. Then we saw another one in March, a little bit less severe. We saw one later in the year in October. This was a significant one. We actually broke the 200-day on that particular move. And then a really big one in December at the end of the year. And so this particular indicator actually caught all of these. And if you were long equities, you could have used this to again get out of the market and protect your capital, or you could have used strategies such as buying puts for protection, or taking a bearish position in stocks or indices or ETFs. So really cool. It's really effective, but again, it has to be implemented correctly. So that's what I'm going to teach you guys today. So before we get into that, just a little quick blurb about myself. I recognize quite a few of you in the room, but if you haven't met me, I am the Chief Investment Strategist at the Trading Profit. I've been trading the markets for 20 years, since I was about 10. Just kidding, joke. But I have traded options, stocks, futures, forex. Right now, I do a lot of my trading with futures. And so we founded the Trading Profit about 5 years ago. We currently have over 17,000 members worldwide. So we have customers that trade international markets all over the world. And the reason I became a trader and got out of the rat race of having a corporate job was to achieve freedom, and not just financial freedom. I like to do a lot of stuff, outdoors activities, spend time with my family, travel, and trading affords me that luxury. So what I'm going to show you today is not something that's theory. It's something I actually use in my own personal trading in real life, and I want to impart that knowledge on you guys so that you can use the same information to achieve good results. And I actually, by the way, I'm going to show you some real life results towards the end of the presentation for my own trading. So I also recently founded and created the Trade Trend Signal software. A lot of you may recognize that. You've been by our booth at the event. So I'm going to go a little bit into that and how to use it as well. So we'll spend about 45 minutes together. By the end of our session, this is what you're going to get out of it. You'll discover how to use the indicator that we're talking about. And again, it's available for free in virtually any trading platform. It works with stocks, options, futures, and forex. And I'm going to show you how to use it to predict market movements. And then once you learn to use it and you learn to use it the correct way, I guarantee you're not going to look at trading or markets the same way again. I certainly don't. It's made a huge dramatic difference in my own trading, so that's what I want to impart on you guys. So what are we going to learn? We're going to learn why momentum is so vital to trading success. It's really the basis of my methodology for trading any market, whether it's stocks, futures, or forex. I'm going to teach you to read momentum shifts and continuations. And I think once you grasp this, it will turn your trading around. You'll find that you're on the right side of the trade much more than you may be now. We'll learn to use momentum as a leading indicator, not a lagging indicator. It's all been hammered into most of our heads that indicators are lagging, and that's true to some degree. But I'm going to show you why certain momentum indicators actually provide leading data. I'll do that here in just a second. And then we'll learn how momentum can predict market moves. So we're going to be using this as a predictive measure. And then towards the end, I'll show you how you can get your hands on a tool that's going to change your trading forever. And I don't say that lightly. I use this exact tool in my own trading, and I make a living with it. And so I say that very seriously, and I'm going to show you how you can use it. So you'll notice I've got a bowling ball here pictured. And the reason I do is because it's going to be a nice segue into what we're going to be talking about, which is momentum. So how many people in the room have bowled before? Probably quite a few. I'm not a good bowler. If I attempt my hand at bowling, most of the time it ends up in the gutter. Sometimes I hit pins, but the point here is that what happens, pretty much anyone, even if you haven't bowled, you can predict if you walk up to the line and you bring the bowling ball back and you release it from your fingers, what's going to happen? The ball is going to roll down the alley, right? And something at some point to prevent it from stop rolling is going to have to stop the ball. And so this isn't meant to be a physics lesson, but in terms of a bowling ball, momentum in physics is simply the property or tendency of a moving object to continue moving, right? So it's that saying an object in motion stays in motion until something stops it. So for an object like a bowling ball that moves in a line, the momentum is the mass of the object multiplied by its velocity. And so this in physics is referred to linear momentum. And the reason I bring up this analogy is because it's applicable to the markets. The same principle can be applied to price movements in the markets. Okay, so that's why I want you to kind of keep this idea in mind as we look at momentum in the markets. So why is momentum so important in trading? Well, first of all, to understand what momentum is and what it measures is the velocity of price changes compared to current price levels. So momentum it's measured by continually taking price differences for a fixed time period. So you specify the time period, and it gives you a momentum reading. And a value above 0 indicates prices are going up, and below 0 it indicates prices are going down. There's literally probably a couple dozen momentum indicators that you can access on any of the trading platforms that are out there. Some are better than others, but really what it comes down to is how you apply it and how you interpret it. So this is just an example of a momentum situation on the chart. I think this is the SPY. It's a daily chart. And although we're kind of focusing our presentation today on the market sell-offs that this predicted in 2018, it also works in the opposite direction, right? So momentum can go up and it can go down. So the good news is you can use it to make money on the way up as well. And it measures the rate or rise and fall in security prices. So just like a bowling ball where you roll the bowling ball down the alley, it's going to stop when it hits the pins. Well, momentum in the market stops when order flow shifts or buyers stop coming in the case of a long trade, or short sellers cover in the case of short setups. So for trending analysis, it's a valuable indicator to predict strength and weakness in the underlying security price. And the beauty of it is it's universally applicable. So you can use it for stocks, you can use it for forex, you can use it for futures. Regardless of what market you trade, it works very well. Here's a little trick I threw in on the side. For those of you who have done any momentum trading or are familiar with it, there's an extra layer of confirmation you can add, because momentum, although it's a very reliable indicator, can, like anything else, result in false signals. So there's a little trick you can use to kind of weed those out, and that's using buy stop and sell stop orders. So if you get a momentum signal to the upside, we would use a buy stop order to enter that long trade. In other words, if the market trades above your momentum shift, you would go long, and vice versa, a sell stop order for a short trade. And that can actually improve and increase consistency and accuracy. I'll show you that here in just a minute. So again, there's probably a couple dozen momentum indicators that are available on most trading platforms. I'm going to give you a few of those and kind of explain what they are. So many of you have probably seen these, the average directional movement index. It can be used to help measure overall strength or trend. Each of these uses slightly different inputs and gives you different information. And again, it really comes down to how you interpret it and apply it. So this is often referred to as the ADX indicator, and it gives an average of expanding price range values, so commonly used one. Commodity channel index, how many people have heard of the commodity channel index or use it? It's probably one of the more commonly used ones. It's called the CCI, often referred to as a CCI. It's a momentum oscillator. It was developed by Donald Lambert, and it measures the relation between price and normal deviations from a moving average. So it does a pretty good job when used alone. The next one's a MACD. This is probably one of the more common ones. I like the MACD because it's a little bit more versatile. It reveals changes in strength, direction, momentum, and duration of a trend in a stock's price. So MACD, probably, how many people have used MACD at some point, familiar with it? Yeah, probably one of the more common ones. And then lastly, the relative strength index. And of course, this isn't an exhaustive list. This is just 4 of the most common that I selected. Oh, and by the way, I didn't mention in the beginning, we will send everyone a copy of these slides, so don't feel like you have to jot too much down or anything. I'd rather you just pay attention and kind of absorb what I'm trying to tell you. We'll get a copy of these to you after the presentation. So the RSI, of course, is another very popular one, and it's a technical indicator used to chart current and historical momentum based on strength or weakness. And the cool thing is with all of these, they're flexible. You can enter your own criteria. So like with the RSI, you can choose your period. Most people, default is like a 14-period RSI. But you can shorten or lengthen those based on your time horizon. But it's important that you know how to do that correctly, or you're going to end up with more false signals than you probably would if you had optimized the indicator. Okay, so we're going to hone in on one of these specific indicators that was on the previous list, and that's the MACD, or the Moving Average Convergence Divergence. And it was interesting to see that was probably the one where more people than not raised their hands that they've used this one. And there's a lot of ways to use it or interpret it and apply it to trading. So for those of you who haven't used it, it's, again, short for Moving Average Convergence Divergence, and it's a trading indicator used in technical analysis of stock prices or really any market. I use it for futures, I use it for forex, and it was created by Gerald Appel in the 70s, so it's been around a long time. It stood the test of time. It works very well when applied correctly, which I'll show you here in a second. But what it does, again, is it reveals, and this is why I like it probably more of any other momentum indicator, it reveals strength, direction, momentum, and duration of a stock's price. So that's a lot of good information all built into one indicator. But again, how do you apply it? So MACD cross is probably the most reliable way to use this indicator in terms of predictive value, right? So yes, MACD does use lagging data, but like we talked about with the bowling ball example, it is predictive because we know that once momentum is set in motion, something has to stop it for it to reverse, and that's no different with this indicator. So it may use lagging data, but it is telling us that there's a momentum shift or a momentum continuation that is likely to continue for a certain period of time. And the MACD cross really does a good job with that. So simply put, a buy signal is generated if you're simply using the MACD as a standalone indicator when the MACD line crosses above the signal line, and vice versa, a sell signal is generated when the MACD line crosses below the signal line. Okay, so pretty simple. So let's take a look at a chart of, again, the S&P. So this is the daily chart going back, this time with the MACD plotted on it. And I'm going to show you where these crosses occurred that could have actually warned us of the 4 major sell-offs that we saw in 2018. So the first one here is on the left side of the screen. So this was late January, early February, I think, when this first correction occurred. And you can see it gave a fairly good warning. It caught it kind of right there at the top, the signal line cross below. And we were warned that there was a potential sell-off pending in the market. And sure enough, it did a very nice job at warning us of that. We saw another one for the March sell-off. Again, this one was another reversion to the mean at the 200-day moving average. Not quite as dramatic as the February event. And these are all over the chart. I'm just showing you the specific major moves that happened last year. So this one in October, we got warning a good week or so before that one occurred. We saw the cross, and there was the sell-off. And lastly, the correction in December, we got a cross there. And sure enough, it gave us a little bit of warning there that the market was going to be selling off. All right, so this works. Question?
Could you please define what those 2 lines represent?
Yeah, so they're moving averages so let me, I don't have my platform pulled up. I use the default settings, which, let me see if they have them up here. Yeah, they're not on the chart, but they're basically moving averages. So it's kind of like using a moving average cross.
120 days or 200 days versus 50 days?
I don't remember how we. Say that again. 12.26.9. Okay. Yeah. So we have this set at the default setting. So 12.26.9. So those are the moving averages that are plotted there. So when the signal line is the blue line, so when that line crosses the yellow line to the downside, it would signal a shift in momentum to the downside, and if it crosses to the upside, it would signal a momentum shift to the upside. The red line and the blue line on the chart are just exponential moving averages. So the red is a 200-day exponential moving average, and the blue is a 50-day exponential moving average. Back there.
Is it crossing before the actual downturn? My problem mostly with that.
Sure.
By the time I see the signal,
it's too late.
too late.
It's too late. Yeah, so I'm going to get into that in a second. That's a good segue into what we're about to talk about. But yes, in this case, it did a pretty good job. If you followed the exact cross, you would have caught the majority of these moves, or it would have gotten you out of the market before you really saw the major sell-off. But it varies depending on the strength of the momentum. But I'm going to show you how we can actually get in before the MACD in just a second. Yes. Mm-hmm. So that's another limitation to just using one indicator, because no matter what indicator you're using, there's going to be false signals. So you need to weed those out, and I'm going to show that too. That's, again, kind of in line with the gentleman's question, is that you need to use a technique to weed out some of these signals. They weren't necessarily false signals. They just may not have been a move of the magnitude that we saw in the market corrections. But we'll get into that in detail here. Is there anything else? Okay. So here's it. Good segue questions, by the way. So I don't use the MACD by itself. I think by itself it is a very good predictive momentum indicator. But the trick and the secret is to combine the right setup of combination of momentum indicators. And when you combine them with volatility studies and price action setups, you can weed out a lot of more of the minor crosses. And so that's what we have done, and we've actually programmed this in a way that we can combine a set of momentum indicators that weeds those false signals out and gives better warning of the major moves. So you can actually do much better than the MACD alone. And this is what we have programmed using a combination of momentum indicators. So this is a chart of the S&P 500. And the signals that are shown on this chart are all momentum-based signals. So they're looking for momentum shifts and momentum continuations. And so these highlighted circles, again, are the sell-offs. But you'll notice, and I apologize, it's a little bit on the small side, especially for people in the back. And again, that's why we send the slides out so you can look at these after the fact and get a closer look. But if you compare this to simply using a MACD indicator, the combination of momentum indicators actually gives you a better warning. And oftentimes it can give you, on a daily chart, can give you more of a week or even 2 weeks of warning before the sell-off occurs. So these were the major ones, but I've highlighted some of the more minor ones as well. But you can see how accurate they can be in predicting the shifts in momentum. So a lot of these signals you're seeing, which are indicated by the red diamond and a red arrow for a short setup and a green diamond and a green arrow for a long setup, it does a really nice job. And just as an example on this last move, I posted an options order where if you had taken that signal and put at-the-money put contracts at the 264 strike in December when the indicators told us that the market was moving down, 10 contracts would have netted you nearly $10,000 on this move, just to kind of give you a frame of reference of what's possible using these types of momentum signals.
Is this a chart of the ETF?
Yes, this is the S&P 500 ETF, the SPY.
Okay, so where do you have the MACD on this?
We don't have it plotted because there's actually about 4 or 5 other momentum indicators that are programmed into this. And we've also programmed in it's an adaptive approach, so it adapts to market environments. So as volatility and order flow and things like that shift in any direction, we combine those shifts with confirmation from momentum indicators. So this is actually an algorithm that we've developed that predicts these market shifts and continuations. So just to give you an example, again, this is an SPY chart. It's a daily chart. At this particular time, this is where the MACD, and again, I don't have it plotted on here, but this is where a MACD cross occurred in a uptrend. And you can see it did a pretty good job at signifying a potential move to the upside, which did occur. But if you use what we've programmed is called trade trend. If you had used trade trend for this same setup, it would have actually identified that momentum shift about a week earlier. But there's a lot of options traders in the room. If you had simply bought an at-the-money call contracts, and this is where it would have told us to get out, by the way, the MACD would have resulted in a profit of $335, not too bad. And that trade lasted about 5 trading days. Trade trend, if you had bought when the combination of momentum indicators told us to get in, the profit would have been closer to $5,000. So that's a big difference, right? If you can combine the right combination of momentum indicators, you can really get into these trades a lot sooner and capture more of the move. So that's what we've done, and that's what we're going to... Oh, question in the back? We do. I don't have it in the presentation, but I'm going to tell you how you can access those here in just a little bit, because this is all back testable. So you can actually back test this on any time frame.
What do you see the implication of supervised trading?
I didn't...
Algo trading.
Algo trading? Algo trading?
They're already using some of these and they're reinforcing the same trend.
Yeah, so what's your question?
What are the implications of reliability?
The reliability. Well, I can tell you anecdotally, because I use this myself in my own trading, it's very reliable. I make a living with this. I actually use it myself. I have been for a long time. We just release this commercially to the general public in January. But I can tell you anecdotally from personal experience, it's very reliable. It depends on the market. Just like anything else, nothing works 100% across all markets. But the beauty of this, and I'll show you how you can in just a minute, is you can actually, and actually it's in this screenshot here, you can actually scan to see which markets it works the best in. But this is just a simple scan. I know it's a little difficult to see, but again, we'll send the slides so you have a better look at it. This is all the S&P 500 stocks using this combination of momentum indicators, and all the green are profitable, and this is over the course of a year, over 2018, and the red stocks are the unprofitable. So the vast majority of these trades were profitable over the course of a year. So it does a very nice job at finding these, but again, it doesn't work perfectly on every symbol. I personally use this to trade futures, and I do very well with it. I'm going to show you actually some live screenshots of my futures account and kind of the results that you may be able to expect if you were to trade these signals on the futures market. Okay, so we've developed this software and this proprietary combination of momentum indicators to help you get in before the MACD signal. And it's a proprietary blend of momentum indicators, like I said, and it really produces some incredible profits. Most of these trades, if you're on a daily chart, last about 5 to 7 days. Again, this works on any time frame, so if we have any intraday day traders here or even longer term position traders, you can trade this all the way up to a monthly chart. But it does predict short and long term trends with astounding accuracy. Again, we got asked a lot at the booth, you know, what's the win rate? And that again varies, and you can back test that, but it varies by market. But it is consistent. It does a great job of, if it identifies a momentum shift or a momentum continuation, and it doesn't pan out, it does a good job of getting you out of that very early on to move on to catch the bigger momentum moves. Again, it works with stocks, futures, and forex. That's the beauty. It's universally applicable across all markets. You can actually use this tool if we have any traders in the room that trade international markets. We have a lot of students that are in and members that are in India and China, and so they use it on international markets. It works very well with other markets as well. Works on any time frame. You can back test before you place a trade, so you can see which markets it works the best on. We have a lot of options traders, so you can use it to supercharge your option strategies. The beauty of it is it does such a good job timing entries and exits that you can really simplify your strategies. So if you're trading complex strategies like iron condors or butterflies or multi-leg spreads, a lot of our traders that use this tool find that they can really simplify and just start trading directional calls and puts. And so they really like it for that reason. I'm going to show you an example of that too here in a second. So no guesswork involved. You get all the information you need: when to get in, when to get out, how to trail your stop, where to place your initial stop. It gives you everything you need to know. So let's look at an example.
Is it able to select the underlines by itself, or you have to select the underline and then?
Great question. Both. So it has a screening function. So if you, for instance, you're a forex trader and you just want to scan the forex markets for an opportunity, you can do that. If you're an equities trader and you just want to look at S&P 500 stocks on a 30-minute time frame, you can do that. It has that complete flexibility to find trades in any time frame on any market. But you can also, maybe you have a favorite stock. I have Micron here because it's one of my favorite stocks. I trade this one pretty often. So you can just pull up a chart of Micron and it's going to tell you exactly where to enter or where to exit. And it's going to give you, as you'll see on the screen, all the past signals as well, so that you can visually see where it's generated trades and where it's exited trades. It also gives you the commentary. So basically what this is, and I just picked one out of the middle here. It wasn't anything spectacular or major, but it identified a nice buy setup there in July of last year. That's signified by the arrow. Again, I apologize for the small print there, but it identified a trade that lasted, it looks like, about a week or so. And you'll see in the commentary, it actually gives you all the information you need. So it says that a buy setup's occurred, and based on the alignment of technical patterns, this includes volume, volatility, momentum, the probability of prices moving up is at its highest. And sure enough, and it gives you the suggested entry price. So there's no guesswork. It tells you exactly where to put your buy stop order. And if that order is triggered, then that's where the green arrow shows you that a live trade is in place. So in this particular example, it resulted in a long trade. If you were just trading the stock and you were trading 1,000 shares, it was a $3,570 profit before commissions and fees. So this is just one little trade that I kind of picked out of the center of the chart there. In the spirit of not cherry picking, because that was kind of a cherry pick trade, I just took the last 5 trades that Trade Trend found on Micron and put them in a chart for you, just so you can get an idea of kind of what this looks like. And I broke it down for stock, if you were just buying the stock, or if you're an options trader, if you were buying calls and puts. So there were 5 signals generated on a daily chart between October and December of last year. And if you had just traded the stock 1,000 shares, over $13,000 in profit on those trades. We had one little loser there in late November, early December. If you're an options trader, you could have bought calls and puts with much less capital outlay, nearly a $7,000 profit on those trades. So it is very consistent. Yes, there are losers, but as you can see here, the losers tend to be fairly well contained, and it does a really nice job at catching the larger trends. So this is just one example of a stock that I like to trade a lot. Here's another one. So this is just looking at the chart with the signals. This is the TNAs. It's a leveraged ETF, and I've just highlighted a few of the trades out of here that it identified. This was, again, based on 1,000 shares before commissions and fees. So there's a $5,500 profit, $2,000 profit, nearly a $6,000 profit on that move, $3,000 on a short sale. Nice short trade there back in December, nearly $15,000 on that one. And then lastly, it caught the rebound there, just almost right off the bottom, nearly $9,000 profit on that trade. So these are just 6 trades, just to kind of give you an idea of the frequency of signals that this provides. It does give a lot of signals. Again, this is a daily chart. If you're trading intraday, you're probably going to get more signals. But just out of these 6 trades, nearly $40,000 in profit before commissions and fees on 1,000 shares. So the potential here is obviously big. And if you can time these trades using these signals, the results can be very positive. And again, I use this myself to make a living, and I do it mainly through the futures market. So I'm going to show you something here, and I normally don't do this mainly because I'm a modest guy. I don't like to brag, and that's not the purpose of this. But I want to show you because I do believe that when you're teaching somebody something, you should show them proof that it actually works in real life. So what I've done is I've taken screenshots of I trade through TD Ameritrade Thinkorswim. And I've taken screenshots of my live trading account, and these are just taken on various days in the recent past, later last year, early this year. And I don't trade big positions. These are all actually just one contract positions on the futures market. But using the trade trend signals, profits of over $8,000, $6,000, $6,000, over $5,000. All in a single trading day. Okay, so this is what's possible. One contract per position. Typically, I have 5 to 10 trades open at a time. And here's a few more. Had a really nice day. This was the sell-off, I believe, back in December. Had a $13,000 day during that sell-off with over $20,000 in open profit. Here's another one, $3,600 for the day, over $4,000. So again, I'm not trying to brag here. I'm just trying to show you, and these aren't cherry picked. These are days that I have on a regular basis, and so this is what's possible using these signals. Yeah.
Are these day trades, or are you holding it for?
Good question. So I seldom day trade the market. Like I said when I kind of introduced myself, the reason I trade is I enjoy it, but frankly, it's a lonely and boring career. So I like to get out and do other things, like go on trips with my family, and I'm a big fisherman, so I get out and fish most of the time during the day. So I don't day trade a whole lot for that reason. So these are actually all based off daily charts. Interestingly, because we do get that question pretty frequently, we have a lot of students that do use our signals for day trading. And so I've done some back testing on the futures markets on shorter time frames, like 15-minute, 30-minute, hourly. And the profits were actually Because generally, the rule of thumb in most strategies is the longer the time frame, the more reliability and consistency you get. Just because markets tend to move trend-wise longer term on longer term time frames, and they tend to be a little bit more choppy on shorter term time frames. But I was astonished to find that these signals actually worked better a lot of the times on intraday charts. So they work well on all time frames. And actually, you can use these all the way down to a tick chart, all the way up to a monthly chart. So we have traders that use these for position trades and trade monthly charts.
So this is real-time data?
Good question too. So this is available in both packages. You can get delayed and real time. This is actually delayed because it's off of the daily chart. So to get these results that I got, you wouldn't need real-time data. You can just use a daily chart. But we do offer real-time data as well. I'll get to that too. So my promise to you, for everybody showing up today, my main goal is to help you have days just like this. Whether you're a futures trader, maybe you're not a futures trader. I do trade equities, I do trade options. But my promise is that if you are willing to try trade trend out, I'm going to coach you on how to do exactly what I do and have these types of days. That's my promise. Okay. We can't guarantee profits, but I can coach you to use this tool to achieve those types of results, is what my promise to you is for attending our presentation. So what we've done is we've put together a very special package for everyone that's in attendance in our room today. We're not offering this at the booth, so this is just a one-time package that you're going to see just for being in this room. And it's a membership that includes our trade trend signals. You actually get 3 months of these on the house at no charge. You get the real-time data, so if you are a day trader, you'll get the real-time data. And we're going to pay that out of our own pocket. I didn't mention earlier, but we have this available on Metastock. So we're going to pay all the data fees to Metastock out of our own pocket for 3 months for you. It also includes 3 months of live private coaching. So you actually get one-on-one time with me, and I'm going to teach you regardless of, a lot of it's customizable. It really depends on what you want to learn. But I can teach you to trade credit spreads using these momentum indicators. I can teach you to trade iron condors, vertical debit spreads, long calls, long puts. We go through everything, and it's on stocks, futures, and forex. So we hold these sessions live, and we do the live trade sessions. So we actually will spend time using these tools, looking at trades together. And the reason is, this is comprehensive. We want to get you from wherever you are now to achieving consistent results in your trading, so you can have trading days like the ones that I showed you. Again, I use this myself to make a living, so I take it very seriously. Again, we have 17,000 students worldwide who have used our alert services. So I urge you to go to our website. It's tradetrend.com. You can check out our track record. You can look at previous trades that Trade Trend has identified, and you can look at testimonials from other customers that have used our service. Okay. We're throwing in a bonus just for people that are in the room today. We do have a 9-hour plus video course that covers all of these strategies that you're seeing on the screen, in addition to others, forex as well, futures, and it's all available at your convenience. You can watch it whenever you want. So we're going to throw that in as a special bonus for anyone that joins us today. I believe the first 20 people that join us will get access to that. It's taught by me, and again, it's online. You can watch it at your convenience. So normally for all of these things, we retail through our website. We charge $38.97 to get this. We, again, have put together a very special deal for the Traders Expo, and we are providing everything, including the 3 months of the trade trend signals at $9.97. Okay, one-time offer. This is just good through today for those of you who are in the class. All right, and again, the first 20 people that join are going to receive a free gift valued at $700, and that's our professional trading series that teaches strategies. I also teach in that course adjustments. So for options trades, for instance, we teach how to adjust losing options trades. So a lot of valuable content in there. Again, so first 20 seats. We do try to keep it limited. We want to give everybody good customer service, and we do a lot of hand-holding. I teach a lot of this on my own time, and so I really want to make sure everyone gets the individual attention that they deserve to learn this and learn how to do it like I do. All right, one other little bonus we're throwing in. If you join us today, I've actually identified a really great setup that is going to take place next week. And if you join, I'm going to share that with you. It's one that Trade Trends identified, and it has a really good potential for a move to the upside in the next week or two. So that's something we're throwing in as an extra bonus for the first 20 people. All right, that's all I got. Any questions on Trade Trend? Anything you want to know? Yeah.
So is this an annual, like, fee membership?
Yeah, so if you decide that you want to continue, it does convert to a monthly subscription. So that would be for the end of day data, it's $149 a month. If you want to continue, we do an annual too that we discount at 10%. And by the way, if you want to join us today, Richard in the back will help you out there. So just see Richard. He goes to the same barber as me, so you'll recognize him.